Okay, here's a look at the emini S&P for Wednesday, February the 29th, 2012. At emini Day Trader, we always like to use the market profiles to gain a perspective on the market. This is today's market and volume profile, and this is what occurred overnight. So we had the belief that the market would likely continue in the upward direction with a target of 76, and as you can see, it hit 76, here's 76 right here. It hit 76.75 overnight and hit 77.25 off of the news reaction once Bernanke released his statement, and then the market found some pretty heavy selling and immediately came down to our next level in the 65-66 area. It actually hit 63.25 right here and then had a pretty nice bounce up as high as 1370 before it then sold off for the rest of the day. So our next level down was 1360. It hit 1359.25. And if the market should hold below that level, that would be quite bearish. And we would look for the next target at 1353. If it can hold above here, maybe just probe quickly below it and then turn around, then it could very well come back up, and we're looking at in the 66 to 67 area if that were the case. But this would be a very fairly major change if the market can hold below today's low, and then we would have a preference to be trading on the short side on a day-to-day basis. Here's the market profiles from the regular trading hours only, and of course we always use them as well in our analysis of the market. Here is our look at the markets for today, and you can see that we had a good red filter to begin the day, went back and forth as the market tried to bounce in here, then turned red again, had a good hunk of green as the market rallied off of this low, and then turned bearish towards the end of the day. So the first few trades that we had, we didn't actually take because, well, first of all, this one was right at the news. We don't want to get into a trade right at the news, especially when Bernanke or the FOMC is releasing some information. So nothing there. We had our support area in here from approximately 65 to 66, as we've been mentioning. So we didn't want to be a seller because of that in here. But once it did get below it, we were able to go ahead and get onto a short trade here that worked out nicely. It did come down and make a new low for the day. When the market turned higher, we did have a long trade in here and another long trade in here as the market turned green. Unfortunately, we were stopped on them. The market was just a little too heavy. It wasn't the best trade location. We did have a very nice long trade, as you can see right here. Had a good rally here. It moved over 3 points in our favor. So that actually turned to be about the nicest trade of the day. You can see our magenta bars right in here. We're very pronounced today. And we would use that as support and resistance. And as a result, here it is again, just to get a little bit better view of it. So once they form like that, this becomes resistance, and then this becomes support. The test here was rejected, had a good rally, didn't quite make the high of it here, and just barely above the high of it here, giving a lot of our traders an indication here to get short based on this diamond and triangle right there, which was a great short. Wasn't actually shown as one of our trade types because it didn't quite meet the trade requirement, but looking at the condition of the market, it was a beautiful long entry. I'm sorry, short entry, short from up here. We did have a long trade triggered here, which is a very aggressive trade, and we were stopped out for a point on that one. We had a late short trade in here. The market was very volatile at this time. We were stopped on it. And then that was too late for the rest of the day, and then it came down and made a new low. So I think the complexion of the market is in the process of changing from intraday up to maybe sideways or maybe even intraday down, and that's something that we're going to monitor closely overnight and then again tomorrow. Of course, we do have the jobless numbers being released at 8:30 a.m. New York time, along with personal income. At 10 o'clock, there's ISM manufacturing and construction spending, so we'll be monitoring how the market reacts to those numbers as well. But as long as the market can stay above today's low, even if it gives a quick probe below, we're still good to go on our intraday up bias. but we're on our toes here because we're on the verge of quite possibly changing that. And that's really the key component of how we're looking at the market tomorrow, with around a 66, 67 resistance and then today's low as potential support. Any questions or comments, just get a hold of us at info@eminidaytrader.com. Always enjoy hearing your questions and comments. So that'll be it for today. So thanks for watching, and we'll see you again tomorrow.